morning. Hello and welcome to Money Control's live stream. You're watching a fresh edition of Opening Bell with me, Lovisha Darad. Well, we did keep you guys waiting, but of course, season's greetings to all the viewers. It is the Christmas Eve and Merry Christmas to all of you. Hope that we have the Santa bringing some cheer to Dalal Street today. But GIFT Nifty for now, that indicates a subdued start for the Indian markets. Even the pre-opened rates, if you look at the screen, pre-opened rates are pointing out to a fairly, subdued and flat start for the Indian markets. But of course, after 5 days of losing streak, yesterday markets saw a relief rally. So we will watch out if there is any cheer which is injected throughout the day as well. We've had a global handover which is mixed. US markets especially ended higher overnight with Dow Jones and S&P 500 extending gains to the third straight day. Asia Pacific markets, that however was largely lower this morning because first Japan's Nikkei reacted to Bank of Japan's reaction on whether they say that they're okay with raising rates if inflation outlook was met. South Korean markets also traded lower this morning after its consumer sentiment index dropped to lowest in over 2 years. So yes, largely a mixed handover for our markets to begin with. We have some stocks in focus. We have Whirlpool, TVS Motors. So we will be discussing all of that later in the segment as well. Don't forget to post your stock related queries on our live feed and we will try to address them before 9:30 a.m. with our market experts. But first things first, let's quickly take a look at the top headlines this hour. Wall Street ends higher overnight, but consumer confidence data disappoints and falls to lowest levels in September. Asian markets are mixed this morning. Despite a strong session in the Wall Street, the GIFT Nifty is indicating a flat start for the Indian markets. Crude prices edge lower as supply surplus concerns and a strong dollar continue to linger. Gold prices also edge lower, weighed by a stronger US dollar. All right, if we take a quick recap of yesterday's trading session, we did see some positive momentum in the markets after 5 days. We saw majority of the gains and support that came in from the financial stocks as well as the heavyweights. Nifty particularly, that crossed its 200 EMA, which is 23,700. So we could be seeing whether or not if there is a certain upside from here on going on. If we look at, what the India Wix did yesterday, that cooled off quite sharply, and broader indices that underperformed in the markets as well. Moving on, let's take a quick look at some of the key figures that would set the tone of today's trading session. First up is the option queues data. Well, the Nifty put call ratio that rose to 0.84 levels from 0.8 levels in the previous session. So there is some sign of, a lift in the markets that could be there. In the F&O ban list, no new addition, but the stocks that have been retained include the likes of Bandhan Bank, Granules India, Hindustan Copper, Manappuram Finance and RBL Bank. Stock which is out of the F&O ban is SAIL. So yes, quite a positive momentum coming for the markets as well. But of course, if you look at the fund flows data, FIs continue to be the net sellers for the sixth straight day. However, the DIIs bought stocks worth around 2,200 crore rupees in the cash markets in yesterday's trading session. We just have a couple of minutes before we hit to the opening bell as well. But let's quickly get on board with our technical expert of the show, Ajit Mishra of Religare Broking. Ajit, good morning. A very Merry Christmas to you. So let me begin by asking, whether or not we see that Sensex has been swinging between 23,400 to 24,000 as well. When can we expect a solidified upward momentum in the markets could be seen?
Yeah, good morning, Lovisha. So, first of all, festive greetings to you, your entire team, and all the viewers. And yes, after the disappointing week, yesterday the start was at least on the okayish note, wherein index opened above the major average, which placed around 23,700 long-term moving average, and it hovered in a tight range afterward. So, Lavisha, the tone still looks negative because if you remember that from the November month low to the recent recovery of around 24,800, we have almost engulfed the majority of the gains. So that indicates that bears are again under control. We are still struggling around the long-term averages. So until we see some sign of decisiveness above 24,000 on the closing basis, I doubt that we can see any meaningful move on the upside in the markets. So it's likely to be sideways to negative tone, which might continue. And more importantly, the sectors which were helping the markets positively earlier, banking and IT, they are also witnessing some profit taking. Yesterday was an exception wherein SDFC was witnessing some traction at the lower end, but largely the other counters they are still struggling. So as of now, the buyer should remain on the negative side until we decisively reclaim 24,000 mark in the index.
Okay, all right. Ajit, Bank Nifty also fared, quite well yesterday. It was up about 1%. So what are the levels that we can eye out from here on?
Yeah, so banking is still comparatively better, both banking and IT, because we are still holding above the long-term averages when it comes to the banking index, which is placed around the 50,440 mark. And today being the expiry day for the banking index, we expect some volatility with upper band around 51,650 as a hurdle, and 50,500 being the major support area. So it's likely to hover in this band, but yes, once we reclaim that mark of 51,650, then probably we can see this sideways tone to extend on the higher side with the next support or next resistance at 52,300 mark. So as of now, banking also looks sideways to us.
Okay, banking also looking sideways to us. But let's see, we are hitting the opening bell, of course, and the first rates on your screen, 23,750 mark above is Nifty right now. Sensex, however, that is down about, it is flat in the red right now. Both Sensex and Nifty, both are flat in the red. So a very subdued start for the Indian markets at this point of time. Sensex is above, however, that 78,500 mark. So we'll see if there is any optimism that kick in the later in the segment as well. If you look at some of the broader indices, that is also flat in the trade, not really reacting at this point of time. Small cap index, up about just like 0.1%. Mid cap, if you look like, it's just flat in the red as well. So broader indices, no much reaction to that as well. India Wix, that has spiked up a bit, about just like 0.5% at this point of time, trading above that 30 odd levels. If you look at the sectors, however, Bank Nifty index, that was the key outperformer and that led majority of the rally in yesterday's trading session. However, today it's been unchanged at this point of time. That is also flat. So, it's a very quiet start for the Indian markets at this point of time. And we'll see, whether this Santa cheer, whether it could kick in the second half of the session or how it's going to pan out. But at this point of time, what the top Nifty 50 gainers list indicate is that the Bharti Airtel, Tata Motors, TCS, Coal India, all of them are dominating the list at this point of time. On the other hand, if you look at the top losers on Nifty 50, they include the likes of Titan, JSW Steel, Cipla, Grasim, Tata Consumer Products. So JSW Steel, it was one of the top Nifty gainers in yesterday's trading session, but today it's seeing a bit of a profit booking and it is down about 0.5% in today's trading session as well. But Ajit, steel stocks that reacted very sharply yesterday to the news flow. How are they looking on the charts for the near term?
Yeah, so metal as an index, in fact, Lovisha, we are seeing struggle means the index has been hovering in a broader range, close around 8,600 to 10,200 broadly. This is the range for Nifty Metal Index, and we are closer to the lower band of the same. So one day of a rebound is just technical pullback, but largely the tone looks sideways to negative. So within the metal space, one should stick with the top names. For accumulations. So stock like VEDL, stock like General Steel, JSW Steel, they are the better performers, but in the near future, they might also continue to struggle in the range. So for a time being now, metal is something that one should avoid if the view is very short term, and if you wish to accumulate, then stick with the top names.
All right, stick with the top names. Let's see. But let's take some stocks in focus, that is Whirlpool India. Whirlpool very flat in the green at this point of time, but yesterday it impacted with HG Electroplast for making semi-automatic washing machines. Now under the new arrangement, PG Electroplast will be manufacturing certain SKUs for Whirlpool at its factory in Roorkee in Uttarakhand. Ajit, Whirlpool, since last month the stock hasn't really performed well. So what does the near term hold? Should we expect the underperformance to continue?
Yeah, so in fact, after making a new high in the month of October, since then we have been seeing, corrective tone continuing. There was an attempt of recovery of late, but it couldn't surpass the hurdle around 1980 mark. So, and again, we are struggling below the long-term averages after yesterday's slide. So this indicates a possibility of further consolidation with the downside bias, with 1800, 1750 being this major support area. So if you wish to look for any fresh trade, then one should wait for any dip towards 1800 mark to buy fresh, with 1750 as a stop loss, and 1950, 1980 will continue to act as a strong resistance area. So it's a buy on dip candidate, not the current levels.
Okay, a buy on dip candidate. 1950 levels, we will be watching out for that as well. Let's take another stock in focus, that is your HG Infra Engineering. That stock has reacted positively to the news after the company announced that its wholly owned subsidiary, HG Bana Sakta, has entered into a battery energy storage purchase agreement with NTPC Vidyut Vyapar Nigam. Ajit, HG Infra, despite a tepid Q2 performance, the stock has been doing well in the past 1 month. So do you expect the positive momentum to continue from here on, or what are the new levels that you're eyeing out for?
Yes, so in fact, the stock has recovered very strongly in the last 1.5 months, and now we are comfortably trading above all the major support zones. So now, in fact, we have a fresh pivot in place around 1400 mark. So that becomes your stop loss for any long position. And the way we have opened today, it indicates that possibility of stock inching towards 1650 mark is high. So the risk reward is also favorable. So with stop at 1400 and for the initial target of around 1650, one can definitely look to go long in HG Infra at current levels.
Okay, go long on HG Infra. Well, let's take some viewer queries at this point of time. They have been waiting in anticipation as well. Well, the first viewer has been asking the view on Praj Industries. Praj Industries, what do you expect on the charts? The company did indicate that they plan to triple the revenues by 2030. How does the stock look on the charts for you, Ajit?
So these sort of stock is something that one should be focusing on. Stocks which are not participating much on the downside, they are rather trading in a range. So similarly, Paraj, what we have been observing is that for almost a month now, that it's been trading in a very tight range around its record high. So that clearly shows that bulls are still under control, and 780 should be your stop loss if you are sitting on a long side, and if you wish to initiate any fresh position also. And in the next swing, once we break 860 mark, then we can see the fresh momentum towards newer milestone, maybe 1000 plus zone. So the risk reward is also favorable. The positioning is strong. Definitely you can go long with 780 as a stop loss.
Okay, 780 is a stop loss for Praj Industries. He's also asking the view on IndusInd Bank. The stock did hit a 52-week low, and in the second quarter performance was also very quite disappointing as well for the investors. So what is the near term in hold? I mean, should we expect that the stock could spiral downwards from here on?
So Lovisha, we are not seeing any meaningful recovery in IndusInd Bank. So despite the oversold position, there was hardly any decisive rebound attempt also. So this indicates that yes, this pressure may extend further, and we don't have any major support as such around the current area. So it might retrace toward 840, 850 level first before seeing any meaningful move or any sign of reversal pattern. So if you have any existing trade, it's prudent that you should take losses and exit that position and wait for a dip towards 840 or a close above 990 mark for any fresh trade.
Okay, 990 mark for any fresh trade for IndusInd Bank. Let's take another viewer query. Nitin Shaji is asking about the view on Bajaj Healthcare. Bajaj Healthcare, it's seeing a strong breakout in the recent sessions. It even hit a fresh 52-week high, Ajit. Should we expect the solid and bullish momentum to continue from here on?
Yes, it seems so, considering that it's almost multi-year breakout in Bajaj Healthcare with very strong volumes. So in the last couple of sessions, post this surge from roughly around 380 to 620 mark, we are seeing some consolidation. So it's a healthy consolidation so far. And if you have a short-term view, then 530 should be a strict stop loss, because otherwise the bias would turn sideways and might extend this consolidation for a longer period. Otherwise, in the next swing, probably 635, 640 is something that the stock might test. So with stop at 530, you can definitely stay put.
Okay, 530 is a stop loss we will be watching out for. Let's move on to another viewer query. Satya is asking to ask about the best support levels to add M&M for 1 to 2 years time frame. Ajit, past 1 month or even 6 months, the stock has been, it's really underperforming, not really moved anywhere. So can we expect any, outperformance going on as we enter the new year?
So M&M definitely is outperforming, in the auto space because if you see the overall performance of the, auto majors, majorities are struggling around their 52-week low. Still, M&M is, maintaining its positive tone, holding around its record highs. Uh, Best level to buy comes close to around 2750, 2770 mark. But you can start accumulating the stock even at current levels and add more in case if it slips below 2750 mark from the investment horizon of at least 1 to 2 years.
All right, 1 to 2 year horizon. But let's take another stock in focus, that is your TVS Motors. Well, the company has successfully completed the acquisition of a 39% stake in DriveX Mobility for about the 97 crore rupees. Now, with this acquisition, TVS Motors holding in DriveX has increased to 87.3%, making DriveX a subsidiary of the company. Ajit, TVS Motors after the October highs, the stock has been spiraling downwards. So, where do you expect the stock to go from here on?
So, Lovisha, now we are again retesting the November month lows, and which also coincides with the long-term averages. So, the way we are seeing the recent price action panning out, a dip below 2365 may result in further slide because we have not seen any meaningful correction in this stock yet. And but indications are now in the favor that we may see a dip towards, let's say, 2280 or maybe lower in the coming days. So for existing position, one should definitely uh, stick with their stop losses, with 2365 being the key area to watch out for. And in case if it sees rebound, 2460, 2520 is the strong resistance base. So around that area, one can look to liquidate the position. And once we reclaim and sustain about 2520, then only we'll have a meaningful recovery in the stock.
Okay, all right. A meaningful recovery could be in the stock. But let's move on to another viewer query. That is your Kishore. He's asking the view on Hitachi at the current price. Hitachi, it has been a multi-bagger stock this year, Ajit. What does the near-term hold for the stock?
So Hitachi, we are seeing now some profit taking. The stock has also slipped below its major averages. So there is a possibility that post this decline, we may see some consolidation. Overall trend is still positive, so it's a healthy consolidation or a correction that we are seeing in the stock. One should wait for any base formation for any fresh long position, and for uh, if the view is at least for, let's say, 6 months to 1 year, definitely you can look to accumulate even at current levels.
Okay, accumulation at the current levels. Let's move on to another viewer query. That is your Palash Mundal is asking about Rajesh Exports at 52-week low. What is the view on current, for going ahead as well? 6 months also, Rajesh Exports hasn't really performed well, Ajit. So, do you believe that there could be any underperformance going ahead as well?
So yeah, despite the oversold position, Lovisha, we are not seeing any sign of recovery or a rebound. In fact, the stock has been struggling to cross its first area of resistance, the short-term average, which is placed around 240 mark. It made multiple attempts of late, but it couldn't surpass. And downside close around 185 to 200 zone is something that we have the next support. But still, we have around 20-25% kind of a downside left, is what the indications are. So if you have any trading position, definitely I would recommend to exit those positions and avoid this stock, because the way it has been declining with volumes, it indicates that it's going to take time for the stock for any meaningful recovery.
Okay, it's going to take some time for a meaningful recovery. Let's move on to another viewer query. That is your Cat has been asking on view on Yes Bank for the long term. Yes Bank, it has been an underperformer this year, Ajit, and 6 months also, if you look, the stock hasn't really performed that well. What is the near term hold for Yes Bank?
Yeah, so on multiple time frames, Lovisha, we have multiple resistances placed around this 2250, then next around 2750. And of late, after this attempt of recovery, it failed, and again we are seeing that stock is drifting towards its previous swing low around 19. So even if your view is long term, I would recommend switching to some quality names like HDFC, ICICI from the investment perspective, and wait for any meaningful sign of revival, both technically and fundamentally, to re-enter.
Okay, all right. Now that we talked about Yes Bank as well, let's move on to the next stock in focus. That is your Indian Bank. Though the stock has not really reacted well to this news, the Financial Intelligence Unit of the Central Bank of Sri Lanka imposed a monetary penalty of about 5 lakh rupees for failing to comply with the provisions of its Financial Transactions Reporting Act. Ajit, Indian Bank past 6 months, the charts haven't been very impressive. So do you believe this news flow to add to the stock's negative sentiment? It is very flat in the trade in today's session as well.
Yeah, that's true. But at the same time, if you see that how the other PSUs are, struggling, it's comparatively better. Means we are still maintaining this, long-term averages. So there's a possibility that it might, remain in a range in the near future. But once we'll see some recovery in the PSU pack, the stock might outperform. So if you have an existing position, 520 on the closing, this should be a stop loss. And once we break this 565 barrier, then definitely 600, 620 is something that the stock might test. So as of now, it's a hold with 520 as a stop loss.
Okay, all right. 520 as a stop loss. Since we talked about metal stocks in the beginning as well, Ajit, there's a viewer query that is coming on JSPL. He's asking the view on what, Pankaj is asking what is the view on Jindal Steel and Power at this point of time. Past 6 months, if you look at JSPL charts, it hasn't really performed well, declined about 12% or so. And right now also, I think after the December slide, it has picked up momentum, but not really doing that well as well. What do we expect the near term that holds for JSPL?
Yes, so basically it's been hovering in this range, and currently we are closer to the lower band 900 to 1075, and once we break this hurdle around 950, then we may see some meaningful recovery also towards 1000 plus area. So as of now, you can stay put until we close below 900 mark decisively. So it's a closing stop loss. Since it's a high beta counter, one should not see the intraday dips. Once we close below 900, then the bias might turn from sideways to negative. But as of now, it still looks okay to us. And once we see the break above 950, then there could be fresh momentum.
Okay, all right. Let's move on to another viewer query. Kushore is asking about the view on VABAG at the current price. VABAG, recently did pick up momentum in the last month, but however, after their Saudi Arabia's order was cancelled, the stock has cracked about 20%. What do you believe? Do you believe that it will pick up later in the sessions, or how do you see the near-term hold for VABAG?
See, the stock witnessed a very sharp decline with volumes almost 8-9 times of the average volume 3-4 days ago. So if that is the reaction to that news, it's not a good sign, because in case if somebody has liquidated in this kind of volume, so probably the stock is heading towards further decline, because it's been a phenomenal run from 200 to 1900 mark. So expect further correction. 1470s the immediate support, then comes around 1340 mark, which is the long-term averages. So around that area, we may see some respite or some consolidation in the stock. And in case if it sees any recovery, 1740, 7050 will be the area of resistance. So if your view is short term, definitely you should utilize any recovery to exit your longs.
Oh, okay. That's quite a positive commentary coming in for this talk. Let's move on to another viewer query. He's been asking, Shweta is asking, what is the good time to enter into Kaynes Technologies? Well, Kaynes Technology, it's seen a phenomenal rally, Ajit. It has the good performance coming from the quarterly updates as well. Q1 was also good, Q2 was also good. What are the new targets that you can eye on for?
Yeah, so the stock is already at the record highs. And after this recent surge, we are seeing a very tight range consolidation. So for any fresh buying, I would suggest rather to wait for any dip towards 7,000 to 6,700 zone. That will be the ideal area to look for long trades based on the overall risk to reward ratio. Upside is no doubt is open, but the way we have already advanced of late, there's a possibility that we might see some consolidation first before making any further move. So one should wait for an dip towards 7,067 zone. Then you can maintain a stop at 6,500 for this position, but the potential target of 7,750, which is the record high zone as well.
Okay, all right. All right, just one last question before we let you go, Ajit. We are approaching the new year as well. So what are your trading picks at this point of time?
Yeah, Lavisha. So what we have been observing is that during this decline, the defensives they are holding strong. Means pharma and healthcare basket they are maintaining positive bias. So Lupin within the pharma space is something that we like. The stock is putting around 2150. So positionally, we can wait for a target of around 2300 mark. So with stop at 2090, one can look to accumulate Lupin current levels. At the same time, after this sharp corrective tone, we are seeing selective stock from the FMCG basket also witnessing some traction. ITC, no, though it's not a pure play, FMCG play, but still here we are seeing buying interest emerging at the lower end. So once we break this barrier of 480, then probably around 495 to 500 something level is something that the stock might test. So here also you can go long at current levels with 645 as a stop loss.
Okay, all right. Lupin and ITC is coming as the top picks. But Merry Christmas to you once again, Ajit, and hope you have a good New Year as well. And thank you for answering the viewer queries, and we hope that we connect with you soon as well.
Thank you, Lovisha, and same to you. Thank you.
All right, let's quickly take a check of the markets at this juncture, and we can move on to our next guest of the show as well. Well, the Sensex and Nifty, it did start flat in the trade, it's still trading flat, but however, the sell-off has intensified a little bit, mildly intensified. Sensex is down about like below that 78,500 mark. Nifty is also below that 23,750 mark. If we look at majority of the sectors has been, slipping in the red and, only, holding minor gains as well. Nifty auto index especially that saw a bit of a slide yesterday. It's up about 0.2% at this point of time. Nifty IT index that is also up about 0.2%. What is not doing well, however, is the metal index. Metal index is seeing a bit of a profit booking after yesterday's upsurge. It is down about 0.8% at this point of time. Mid cap and small cap indices even they are not doing well. Broader indices flat in the red at this point of time. But on that note, let's get on board with our fundamental guest for the show. We have Hemant Shah of 7 Islands PMS. Hemant, good morning. A very Merry Christmas to you. Yes. Hemant, let me start off. We were off to a good December start, but certain uncertainties there on the global front. We have the rising dollar, treasury yields, and then we have the Trump's comeback in January as well. So what should we expect in the first half of 2025? Should we expect the sentiment to remain bogged down?
Yes, Lovisha. So let me just give you some perspective. So in the calendar year 2024, I think 2024 has been really challenging for the equity markets, especially in India, with a lot of events, elections, local elections, India elections, US elections, and many geopolitical issues. And during this 2024, I think our equity markets and indices have weathered a lot of positives as well as a lot of negatives. And if you see YTD returns from January till yesterday, almost December end, I think Nifty has given almost a return of 8.5%, 9%. And the Nifty midcap index has given a return of almost around 23%. Vis-a-vis, the US Dow Jones has given a return of 14%, that's YTD, and Nasdaq has given a return of 32% in terms of only indices, right? So what we feel, India has little bit underperformed over the past 3-4 months based on the FIS selling, I guess, and the pressure on the indices. But going forward, as you said, in 2025, we see this underperformance of Indian equity markets to be narrowed down. And I think the outperformance of the midcap and midcap stocks rather, midcap index, I think is going to continue and definitely in the next 2025 as well. So broadly, I think midcap should definitely outpace. It has outpaced even in 2024 calendar year. I think we anticipate for the first half, again, mid-cap will definitely outpace the broad indices. And I think the discount or the underperformance the Indian equities vis-a-vis US markets will also get narrowed down. We are mildly bullish, cautiously optimistic. But I think the main question is when we will cross the new high, right? I think at Seven Island, our view is it will take little more time, and I think we are entering the new year with a big event called budget. So let's see, wait and watch, and let's see. But hoping for mid-cap rally to continue even in 2025 first half.
All right, all right. So you believe that mid caps are going to lead the charge for 2025 markets as well. But Hemant, when do you believe the FIIs are going to return? Because they are positioning themselves more towards the US equities instead of EMs at this juncture. So do you believe that the FIIs return is also going to be quite hesitant in 2025?
No, I think in the first maybe first 3 or 4 months, I think FIs are not going to come in Indian market with a hurry. I think even still the net figure is just selling, right? And I think once the selling is settled down or the levels are reasonable, I don't think any major inflow is likely in the new year itself, in the starting of the new year. Again, the main trigger or the main expectation would be, or the event would be the budget. I think the game changing for even the FI to think about again investing in India in a big way can be some good decisions in the budget, maybe in terms of taxes or maybe in terms of long-term benefits, something like that. But in the near future, frankly, as it is where it is, we don't expect FI to jump in to buy again the Indian equity market over a period of next a quarter or so.
Okay, okay. So, what does it mean for the large caps recovery going ahead? You spoke about mid caps and small caps, but what does it mean for the large caps going ahead in 2025?
So I think even in terms of numbers, Lovisha, if you see, the Nifty 50 has given the growth, the profitability growth has been in the range of around 12 to 14%, which is reasonably muted compared to last 3 years average, right? And I think this muted growth is likely to continue even for the calendar year 2025. And hence, we anticipate definitely continuous selling where, see, Nifty 50, all the components of Nifty 50 has a lot of FI exposure. And I think that is where we expect the selling to continue. And I think at every rise, there will be some or the other selling by some FIs. So the broad indices might remain range bound. And hence, I think we expect the mid caps will outperform, keeping in mind the broad indices will be range bound. Maybe the range can be 23,500 Nifty to maybe around 25,000. But as you said, I think supply will continue for some more time in the Nifty 50 stocks by the FIs.
Okay, but what are the major risks that the investor should watch out for the next year? Is it the FIIs, is it the Trump's presidency, or what is it that they should be really cautious about?
Loisha, I think known risks are not risks, right? And I think the only risk Indian markets today are transforming or having is the valuations. Valuations are so high broadly, whether it is in large caps, whether it is in mid caps, and even micro caps are, many micro caps are quoting at 80 and 100 Ps. I think it is the valuation is the biggest risk. And I think the only advice to the investors would be focus on 3 Vs, what we call it Seven Island 3 Vs: valuation, visibility, and validation. So valuation should be reasonable. There should be visibility of the profitability and growth of the business. And the validation means the promoter's background should be good enough to invest in. I think these 3 Vs are going to be most important for this coming 2025, Lovisha.
Okay.
So valuation is the biggest risk according to me.
All right, okay. Valuation is the biggest risk. But we did see the markets correct from the September highs as well up to now. So what do you believe that going into the Q3 earnings seasons, do we believe that the asking rate is still higher from the investor perspective?
So I think the results, if you see, even in the first half, the results are quite in line. But the expectation and the growth expectation in terms of numbers and the valuations, I think has exceeded the numbers. So hence there is correction, right?
Yeah.
So we can always blame it, the numbers are muted and hence the correction. But I think the expectation of the investors was so high in terms of growth that we have given a multiple of say 40 and 50 and 60. And I think we are discounting some few sectors and few companies for FY28, which is I think I've not seen this kind of euphoria or this kind of spreadsheet for FY27-28. Market is always willing to give good discounting for a year or a two in advance, right? But this 3-4 year in to give discounting at the profits of 2028 can't be discounted today when we don't have that kind of predictability. So hence the correction. And as you rightly said, the indices are down, broad indices are down almost 11.5%. But if you see the mid-cap index has fallen just from 61,000 to around 58,000, which is almost 6.5%. And it has weathered a lot of pain. In fact, this is the first time I'm observing that mid caps are not falling in line, or in fact, usually mid caps fall larger in terms of quantum than the broad indices. But this time, mid caps are quite resilient, and hence we expect mid caps will do well. But mind you, the valuation and visibility of the profits are going to be the key, and I think the mid caps, select mid caps will do well. I think 2025 is going to be the year of stock selection and stock picking rather than any sector specific rallies, Lavisha. So we have to be very agile and we have to be very precise in investing in companies, and we have to give a lot of weightage to the research, frankly, to
Okay.
invest in 2025.
Okay. But any sectors that you're watching out for in 2025 for portfolio construction or anything as for like?
Yes, Lavisha. So basically, what we expect, even in the last budget and even in this budget, I think the government capex on infrastructure is going to continue, and I think it's going to intensify, right? So we are focusing on the many infra companies, generally infrastructure companies, whether it is large cap, whether it is in mid cap or even in small cap, where there is, I think, expectation of large orders to be given. For example, if you just see last week only, I think the government, I think Modi government has approved the river linkage project, which is almost 40,000 crore in the geography of MP and Rajasthan. And I think this river linkage has been talked about since last at least 5 budget, if I am not mistaken. But this is the first time the actual decision has been taken. So we expect a lot of companies which will bid for this so-called 40,000 crore project. And I think a lot of good companies will win big contracts to be executed over a period of next 3 to 4 years. So this infrastructure space we are really bullish on. And FY25, I mean, the calendar year 2025 is what we feel is going to be a consolidation year in terms of the indices. And I think in terms of the 2025 will be the year of execution for many companies, which has got so many orders. For example, railway companies are going to execute in the order backlog which they have received in 2024 over a period of next 2 years, 2025 and 2026, right? So-called long orders which were given by Bharat Sanchar Nigam, almost 60,000 crore orders has been given to the companies, which will get implemented over a period of next 2-3 years. So 2025 is going to be the year of consolidation in terms of indices and execution in terms of the corporates for many sectors where they have got good order backlog. But hence, we expect infrastructure sector to do really well for the next 2 years.
Okay. Does this mean that defense and railways are also poised to pick up in this year?
Absolutely, absolutely. So the defense and railway order books are, I think, almost done. this is the time for execution. So how best and how well the companies execute is going to be observed by fund managers like us in terms of so better execution will yield better profitability and in better timeline. So that is what we should look for, I think. Having said that, the valuations are definitely high, but I think the order backlog has some visibility for these companies to perform well for the next 2 to 3 years. So infra as a space, we are bullish, whether it is road, whether it is water infra, whether it is railways or defense. And Lavisha, one more point I would like to point out. I think if you talk about say defense, I think let's focus on the whole supply chain companies where many mid cap and small cap companies are also going to be a part of larger order to be executed by say HAL or BEL, right? So I think we should focus on those companies also in the supply chain where they are a really critical part to supply say some hardware component or some software component or some critical electronic component. I think these are the companies we are focusing on for 2025.
Okay, okay. All right, with that we have to let you go, Hemant, but thank you so much for your time. We hope that we connect with you soon, and once again a very Merry Christmas.
Thank you, and wish you and your viewers a Merry Christmas. Thank you.
All right. Let's take a quick check of the markets at this point of time. We'll see whether or not Sensex and Nifty has been holding well. Well, they're seeing a bit of a recovery. Sensex is up about 49 points above that 78,500 mark. Nifty is also above the 23,750 mark as well. So we are seeing a bit of a recovery in the markets. Let's hope that this recovery intensifies and bulls go stronger ahead as well. Mid cap and small cap indices. Small cap is up about 0.2% at this point of time. Mid cap unchanged at the flat in the red at this point of time. India Wix, that has slightly cooled off. It is down about 0.1%, but still trading above that 13 odd levels at this point. Nifty IT index, this among the sectors what is doing well include the likes of Nifty IT, Nifty Media, then you have Nifty Energy, Nifty Auto, all of them holding well and strong in the markets at this point of time. However, on the contrary, on the flip side, we can see Nifty Realty and Nifty FMCG, Nifty Bank Nifty, all of them not really doing well. But we'll see whether or not there is a pickup in the pace in the second half of the trading session. But we'll watch out for that as well. But with that, we have come to an end of Alright, we've come to an end of this edition of the Opening Bell. Don't forget to tune in at 3:30 p.m. for closing bell, and we will be discussing about how the market is developed and what the stocks are in focus. Well, until then, signing off, stay tuned to moneycontrol.com for all the news updates and market insights.